Okay, with our final example, we have a set of accounts here in my sample data. Let me just show it to you here. That start with 253 that are loans. And what we're contemplating is the idea of charging interest on these loans, and we're using account allocation to charge interest. And it goes without saying, I could just as easily be paying interest if this were a revolving fund. And so an account could here be getting interest, just sort of done opposite of what I'm showing here with charging interest. But the simplest way to demonstrate this is to just use the accounts that I have. So these are the balances of the accounts, and we want to charge interest on it. And so what I've done is over in chart of accounts, the same routine. You're going to see the routine is very straightforward here. In chart of accounts, I've set up a Z memo account with my interest rate. Okay, and there's not much to see about it except for it is a memo account. Okay, very important to be a memo account. And then I went over to I changed my ledger, like I've sort of set as the pattern of the other ones. I changed my ledger to B. And over in the B, I recorded and the interest rate. Now remember, I'm running this every month, and so I will put in a monthly interest rate. So 5% divided by 12, if it is a 5% a year would be 5% divided by 12 would be the monthly rate. And so I do the interest rate, okay, and go okay with that. And the account code is the account that had the interest rate, the memo account, and to record monthly interest rate. Okay, and so let's just say it was 6% or something of that sort. But well, I'm going to put in 0.5 to represent half of an interest rate, half of a percentage interest rate. So that would be like 6% or something like that, if I can do that. And then we debit and credit, and we're going to put it in for the 8th month. Okay, and the transaction date can be today, and I think I'm all set. And we'll go okay, and we'll post this baby. Remember, it doesn't have to balance since it's a memo account. And then I'll change my back to my operating account, my activity, my actual A ledger. So I'm in my A ledger now, and we're all set to go. And so my ratio, just looking at my ratio here, okay, I have already got it all set up, so it's not a surprise to you. So let's just show you the way I've got it set up. I've got auto interest rate is my ratio, and you can see that it is picking up that account I just created and just populated right there. The filter, I didn't use any of these because it's not really doing anything on the dimensional level. And then in this case, balance would probably work just fine, and then absolute percentage, since I put in the 5%, 0.5%, then I'd want to use absolute percentage. And so if I wanted to put in a figure at the beginning of the year, I could put in balance and just use that all year long. Or if I want to change it every month because the interest rate is changing every month, then I would use period and so forth. Okay, the obvious ones that come to mind. All right, and so that is ratios. The source, okay, is the setup here for auto loan interest. Okay, and remember we leave this blank unless we know what we're doing. If we're doing layered allocations, we would do it there, use that. Okay, and looking at account 250 to 250 ZZZ, okay, those were the accounts that I'm trying to charge interest on. Okay, and the A ledger, and we've left the offset account blank. And what we want to look at, that's important to this project, is the source amount is the balance of the account. That's what we're going to be charging interest on. Okay, on filters, I did nothing unusual in filters, but I did fiddle with this down here. And that if I believe what I'm doing down here is getting so I'm not paying interest on credit balances. Okay, I believe that's what I've accomplished by these adjustments right down here. That is, if there's a debit balance, I am charging interest, but if there's a credit balance, I don't want to pay interest. And so that's what I believe these adjustments here have done for me. And now this is important here in the consolidations. You could see I have said I want to roll forward. All right, I want to roll forward each of these ledger analysis and put it all together in that. And ledger analysis 3 is fund, but I want to keep everything at the fund level the same. Okay, so this basically said if any of the transactions in that account were analyzed by these dimensions, to ignore it, but not to ignore fund. I believe that's what I've accomplished by this. Okay, and so then we will go ahead and exit that. And then the target is the deal here. Now the target is going to be sort of interesting because I have not been able to find a way to, on the target, to designate. So the charges to the liability account for marking up the interest are fairly straightforward. But what should be the other side of the entry? Well, the other side of the interest should be interest income. But I've not been able to find a way to designate the fund function and restriction for that target. And for that reason, what I'm doing in my demo here is putting it to a liability account that only needs fund. Okay, and then what I would have to do is have an entry that takes it out of this liability account and puts it into revenue after the entry is made. That's the best way I've been able to figure out how to do it. With some research and maybe getting some help from Infor, we might be able to do better. Okay, and it's the A ledger. So this is the liability account to be the other side of it's taking the place of interest income, and then I'll have to get it over to interest income later. It's very similar to the situation we run into with revaluations, where we can't put the revaluation income or expense directly into our profit and loss accounts because the process doesn't include a way to record fund function and restriction. And so we stick it here and then move it. Okay, and so if you were doing this, you would set up a special account, suspense account, to receive that. And finally, let's see, we can ready to do our setup. Okay, so we'll go back over to here, and the setup is where we have a little bit of discussion. And the setup is for Alto. Okay, and this is going to be extremely educational for you. And this one is the one where you do change the number to 1. Okay, and it's a split type allocation. And you can see where I've identified the source, the target, and the ratio that we have just finished setting up. And we've set up a journal type of JV. And under options, I've left these at the default. Maybe have set retain journal source and retain journal. And I have consolidated at the lowest level. Okay, and I'm not sure that is exactly the best way to do it, but I don't want an entry at every transaction. I just want an entry at the total. And so I believe that's what I'm getting there. And you're going to see in a minute that we have a little bit of a problem, and it may be I should try variations of this to solve my problem. And then in currency, this is a little bit of a mess over here. In the previous demos we've done, value 4, value 4, value 4, value 4, everywhere, and it seems to work. All right, as you're going to see in a minute, this what I'm demonstrating doesn't actually work. I know that's a little bit disappointing to you, but you can learn from my troubles as much as from my successes. And so this will show you how that I'm working on resolving it. Now, it is setting up the currency here in a multi-currency environment is very complicated. Let me just see if I can show you what I mean. There's in the instructions, the help for the corporate allocations, there's a whole instructions on how to choose the currency, and you can read this complicated thing here if you're operating in a multi-currency environment. I think most of the people interested in using this are not in a multi-currency environment, and so I haven't put a lot of effort into resolving that question. However, I should mention that my demo is a multi-currency environment. Okay, so I think that's going to be, that is the source of the problem I'm having. So I have set this up right now as value 1 equal to value 1, value 2 equal to value 2, and set these two to unused. Okay, and maybe the best thing to do is to put this all at, just like we did in the previous demonstrations, because I think that's what will work in the single currency environment. Okay, so let me just put this like this so you can have a sense of it. Okay, and we go okay. And maybe we'll go over here to options just to play around a little bit. Let's do target at the transaction level. See what we end up with. All right, and so we've got that, and now we'll do our run. Now, in the previous demonstrations, I always had to go do another entry, either to be, another entry, either to serve as a source transaction. But in this case, we're just taking the balances in those accounts, so there's not an entry being allocated, or there's not an entry that's the basis for the charge type allocation. We just want to run an interest rate, so we are okay without any additional work in that direction. And so let's run it. And I'm going to try putting 1 there. I think it's important. And the period for my demonstration here. Okay, and you're going to see if it's like the past. Okay, you can see this was 6. This is positive to see this, but you could see that the import failed. Okay, so we're going to try to learn from my errors on how to how to get some sort of direction out of this. Let me show you what this looks like. So here is the report on the allocation. what it attempted to do, and you'll see where we stand. Now you can see that this entry here, target entry, is taking the balance and multiplying it times the interest rate to get the interest that's being charged. I'm not positive that the 5% is going to be mathematically correct, because I've been trying so much it looks to me that it is trying to do a 10%, but that is not a mistake on its part. It's picked up the 5% that I did prior to starting recording, and then it's picked up the 5% that I did just a second ago when I was showing you how to do it. So it's now trying to charge a 1% interest or something of that sort. Okay, but the mathematics there has been working very nicely, so that's not a problem. So here is the amount of the account, and this is the interest it's charging. Okay, and you can see that it is going to account, the fund is going to account 10. When I first started this project, it didn't show up the 10. You can tell that because this is an asset account that it is requiring fund, and that it is getting its fund. And then this is the transaction amount, transaction currency there, and this is the base currency there, and you can see that's exactly what it's supposed to look, okay, on that. All right, but then when you go over to this page, this is the other side of the entry. So we had credits on the previous, we have debits over here, okay, and so you could see that we have, all right, and so this is a good point. So it's picking up the fund here correctly now. You see, if it didn't have a fund here, it had it up there, then I need to change my consolidation amount, settings, so I'm able to pick it up. So the point I'm trying to make is that we're building an entry, and it's giving us the parts of the entry that we need. And I'm going to show you my problem that has been sort of the showstopper, is that we are out of balance. I'm out of balance on my entry by the base amount right here. I'm out of balance. You could see that the base amount has come up 0 on my source. So I've got a little bit of problem that is caused, I believe, by my multi-currency environment. And since I've sort of used up all the time I want to spend on this, and have worked quite hard trying to resolve this problem, I'm just going to leave it like this, because you can sort of see that it is working and the way to set it up. And you can also use this to sort of figure out how you go about solving the problem. So you look at each line, and that's the debit and the credit that's going to be made, and you have to work with the settings until you get what you want. Okay. All right, now it is interesting here, and let me just show you this a few other things that I've learned. Okay, that there we go. In the last video, I talked about making a credit or a debit in the amount you put in the ratio entry, and I found out this little thing here you don't need to. If you notice back on this entry here, this credits this account. These accounts are being debited, and I believe that's what I want, right? Yeah, so that is what I want. But if it wasn't coming out like I wanted, then I would just come over here I'm in the setup, allocation setup, under options, and here's a chance to reverse the sign. Okay, let's see what, I might have it reversed already. It was my intention, so let's look at it. I meant to show you this while I was over here. You see, so I've got the sign reversed. So all of that cookie stuff in the last video about putting in a debit or credit in the percentages, you don't really need to do. Just put it in there as a debit, and then use this to make sure the entry is coming out the way you want. Once you've got it set up, though, remember the beauty of this, it is a big aggravation to get it set up and running. But once you've got it working right, then all you have to do is to run it just every month. Just click the button and run, and it just goes right on through. And so I believe that's all I'm going to show you on allocations. I would love to give you some real snazzy thing where it just worked perfectly here at the end, but I believe it's caused by the multi-currency issue and the struggle with getting these settings here right at a level that I don't understand yet. And so over time we'll do it, and if you have a particular interest and you're doing a corporate allocation and want me to remote in and help you work on it, I'm glad to do it. And if this becomes the problem at your organization, I'll take the time to make sure we get you straightened out. So I hope you enjoyed these videos on corporate allocation. And my next project I'm really excited about is fixed assets. And you just have to enjoy those too. All right, thanks a lot.